Hi, I'm Jon Niemeyer with Exit Realty North Star, sitting out here at the Freedom Rock in Norwalk, Iowa on a beautiful middle of the November day. They don't come like this very often. And I've got my good friend David Bell with me from Gershman Mortgage. David, good friend of mine, and he's been in the military, he currently is in the Air National Guard, former Marine, I think. Can you be a former Marine?
Can't be a former. Once you are, they
Yeah.
can't give you back. So you just stick being always a Marine.
Well, David and I both have an interest in serving veterans.
That's right.
And helping them purchase homes, and it's a real goal of ours to make that happen for people. And so I invited, he would happen to be in town, and I invited him out here, and we thought we'd talk about VA loans.
Right in front of the Freedom Rock too. It's
I know.
gorgeous out today, folks. So this is fun.
It
This
is.
awesome. Yeah.
So you get a lot of questions about VA loans, and I think there's a lot of confusion about them. And
Isn't there?
yeah,
Both on the civilian, the realtors, and loan officer side. So let's clear up some of that stuff, shall we?
sure.
By all means.
So one of the basic questions, I guess, is who actually qualifies for a VA loan?
that is a
It
wonderful
seems like
question,
a simple thing because it'd be veterans, right? But,
You'd think, right?
yeah.
But then you have active duty, you have guard, you have the reservists, you have guard that have been on active duty. So there's all these different rules. So typically when you're dealing with active duty, it's those individuals that they have served for at least 90 days active duty. Now this does not count your basic training or any schools that you get. So it's like, no, once you're done, or once we were back in the Marine Corps, we said once you're in the fleet, then the 90 days starts, not the basic training stuff. But if you're in the Guard or the Reserve, it's a completely different story. In the Guard and Reserves, typically you're 1 weekend a month, 2 weeks during the summer, so the accumulation of time is different. Typically you have to have 6 satisfactory years before you now can qualify for the VA home loan. Now, if you are in the Guard or Reserves and you get activated and you're sent someplace for 90 days, and it doesn't have to be continuous 90 days, but you're activated and you're doing active duty cumulatively for 90 days, now you're good to go. You qualify for the VA home loan, but otherwise it's that 6 satisfactory years. And I gotta tell you, I have had veterans that have missed 1 satisfactory year by like just a day or 2.
Oh my.
And so they can't qualify, so now you gotta wait a whole nother year before they qualify.
So, so if they qualify that way militarily, what are the other qualifications financially?
Great. So first off, let's talk about credit scores first, because this is a piece that a lot of people aren't aware of. So each loan program has different credit score requirements, and that's where you're gonna start. You need at least a 600 credit score to go VA. Each loan program a little bit different. When you're docking conventional, you need higher credit scores. FHA will let you go quite a bit lower, down to like 580. But VA has a hard line in the sand. 600 credit score. Anything other than that, that's awesome. But at 600, that's going to be where they draw the line in the sand for credit scores. Now, the next piece of the puzzle is your debt to income ratio. So assuming that they qualify based off their service and that they have a 600 credit score or higher, then what is their debt to income ratios? And this is for every dollar you bring in, how much is going out towards debt. And typically you're going to want to be below that 50%. Trust me, you and I know that when we're talking to buyers, we want to be well below 50% debt to income ratios. But VA has a very gray area here where there's not really a line in the sand. I've seen veterans qualify 65% debt to income ratio, and they still qualify for a VA loan. Now notice they probably had some other income that was we know of, but they couldn't qualify with it, like rental income or something like that. But yeah, it's a really interesting thing. So the debt ratios is the next piece of the puzzle. So you go back and you say, hey, do they have qualified service? Is it at least 600 credit score? And then what is their debt to income ratio? And those are going to be your 3 main requirements to getting a VA home loan.
Cool. Well, you mentioned rental income.
Yeah.
Is it possible to rent a home that you have a VA mortgage on?
Love it, because yeah, we all know that when you're in the military, sometimes you might be stationed someplace and now you're not going to be stationed there anymore, you're going to be moving out.
Right. Well,
Well, you don't have time to get the placeholder, you really don't want to sell the place. You absolutely can. You could have a VA home loan on that place and move to your next service or duty station, buy another VA house without selling this one, rent that place out and utilize that rental income for qualification purposes.
awesome.
So I'm going to follow up with the question most people ask. So you're saying you can have more than one VA loan at a time? But you sure in the heck can. You can have up to 3 VA loans. There's a mathematical equation the lender needs to do to see how much entitlement you have left. And sometimes it may mean that you have to put a little money down. But yes, you can have multiple VA loans at one time.
Now we've qualified someone militarily and financially. Are there any qualifications for the property?
Yes. Yeah. So VA is a government home loan, inherently like FHA and USDA loan. And you know a government home loan when the letters don't make words. VA, FHA, USDA, they're all acronyms, right? So yeah, they all kind of follow the same set of rules when it comes to safety and protecting the buyer from things that could go wrong. So when you look at a house that was built before 1978 or in the year of 1978, this is when lead-based paint. Thank you. Lead-based paint was a big thing. If there's any chipped or peeling paint on that property, they're going to have to scrape that, get it all cleared up, and repaint it. They don't want kids eating that lead-based paint because it tastes like sugar and they can get really, really sick. Beyond that, other things like holes in the walls, holes in the screen windows, especially on the second floor, that's going to have to get taken care of. If there are more than typically like 2 steps and a front access point, you're going to need a handrail. Let's say it has a basement or a cellar and there's no handrail. That's going to have to be added to it. And then if there's any electrical wiring in the house or in the garage or any outbuildings, that stuff needs to be covered and kind of put away. So again, safety. Just think safety when you're walking through the house.
So is there a funding fee that goes along with a mortgage?
So as we talked before, VA, FHA, USDA, they're all government home loans. You can tell a government home loan because the letters don't make words, right? Anytime you deal with a government home loan, you're going to be paying some kind of funding fee. Now this is a fee that gets rolled into the top of the loan. It's not something you have to dole out money at closing for. It just gets tacked onto the front of the loan.
Okay.
And so with VA, it varies based off of how much money the person is putting down. It's going to be a larger amount if you put 0 down, and then it's going to go a little bit lower, and then it's going to go a little bit lower if you're putting 5 or 10% down. Now, the only time that you don't have to pay a VA funding fee is if the veteran has a 10% or higher VA disability rating. And I kid you not, if you're a veteran and you're like, I don't have that yet, my question to you is this: do you have any hearing loss? You probably do. We all do, just from all the stuff that we were doing. And it's very easy to get that VA disability rating of at least 10%, and then you never have to pay that funding fee. And when you start doing the math, that is a lot of money that gets tacked on to the front of the loan if you don't have that disability rating. So this is a way, do the paperwork now, get that funding fee taken care of, then you never have to pay it, and it just makes for a heck of a lot better process.
How do interest rates and closing costs and things compare to other types of loans, or like a conventional loan?
Yeah.
Even?
So usually the VA or FHA will be 1/4 to 1/2% lower than your conventional interest rates. Now bear in mind credit score plays a little bit into this as well, but apples to apples, you're usually talking about 1/4 to 1/2% better interest rate or lower. The other piece of the puzzle there is that yes, you have that funding fee, but with VA, you don't have any mortgage insurance. So you can put little, if not anything, down on a house, and you're not paying that additional fee like conventional and FHA have. They both have mandatory mortgage insurance. Conventional, if you don't put 20% down, you're going to have mortgage insurance. FHA, you're going to have mortgage insurance. VA, there's no mortgage insurance. So you're getting a lower interest rate, no mortgage insurance, and very little, if no money down. That's not too shabby when you start putting the pieces together.
Right.
Yeah, and then you factor in that 10% or higher disability rating, so now you're not paying that funding fee. At that point in time, this becomes a loan program that makes the most sense in most cases.
How long does it take to process a VA mortgage?
Okay, I'm going to answer that one, and I'm also going to answer the closing cost question that you had, because the processing of VA loan, in fact, we had this question come up a few years back. And they started to do the due diligence and look into the different mortgage companies, getting the information. It takes the same amount of time.
Same amount.
Yeah, so usually around 30 days, give or take, on a VA home loan. You have the appraisal, you have the title work. There's really not a whole lot difference. Now, bear in mind, there are less appraisers that do VA appraisals than there are just that can do all types of appraisals. So that can be something that can be a sticking point, but I've never seen the lack of an appraisal cause a delay for closing time.
Okay.
But yeah, so typically about 30 days. And then you asked about closing costs. Closing costs should be about the same as your conventional and your FHA and your USDA. Depending on which lenders, they're typically going to have their fixed closing costs, right? VA should be the same. There isn't an inherently piece of VA loan that's going to require their closing costs to be any more than your conventional or your FHA deals.
All right. So, last question.
Okay.
There's people out there that have currently have VA mortgages with really nice interest rates. Maybe even.
I know what it's going to be, so I knew it the minute you started saying that. But go ahead.
Is there a way to sell your home and have someone assume your mortgage?
Yes, an assumable loan. Let's talk about that real quick. So again, VA, FHA, USDA, we all know they're all government loans because those letters don't make words. All those are inherently assumable loans. So what that means is the buyer could come in looking at your house in comparison to some other house, and you have a sweet VA interest rate. They could assume that interest rate as long as they qualify with their credit score, as long as their debt ratio is qualified. They do not have to be a fellow veteran, but they can qualify with the credit score and the debt ratios all within line, and they can come up with the difference between what you're selling it for and what you owe on it, because what you owe on it, that's where that low interest rate is going to be tied to. So how do you do that? Well, whether they have cash or they have some form of secondary mortgage, that's what they would do. But when you start to look at it, let's say somebody has a sub 3% interest rate, and the market right now where VA loans are anywhere from 6 to 7%, well gosh, even if you do take on a second mortgage for a little bit on the top end, you combine those interest rates and it's going to be a way better deal to do the assumable loan. So it's a darn good deal, and it's something that a lot of veterans aren't even aware of when they're doing it. But if you refinance or purchase in the last 3 years and you're getting ready to sell, man, that's something to look at, because that is a sales point right there.
It is.
Absolutely.
Yeah. Well, David, thanks for clearing up some of this stuff about VA loans with us today. And if someone wanted to learn more about VA loans or really any kind of mortgage, we're going to have your contact information on the screen here.
Very cool. I'm always here to help answer questions. Knowledge is power, and it's very lightweight, but the devil's in the details, and so that's why we always say, get educated, not sold.
Right. So thank you for joining us today, and we'll look forward to seeing you soon.